After several days of chop, the market finally decides to drop. Can the bears follow through? This is Invest with Jacob. Okay guys, so in yesterday's video and really all this week, we've talked about the fact that the market is chopping around in that blue resistance box, and we were looking for a breakdown out of that box, and the market finally did so yesterday. Now the question is, can the bears follow through? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. Okay, guys, so the market did break down, but yesterday was kind of one of those days where things just don't work out and your timing's just a little bit off, and we didn't have the best trading day, and that is part of trading. If you aren't losing, you aren't trading. Now, why do I tell you that? You may say, Jake, why would you tell us you're losing? Because I'm upfront with my people, and I'm upfront with you, and I care about the people in my room, and if you want to be part of a team like that where we win overall and have great success, but also are upfront and don't hide behind anything, check out later in the video. For now, let's jump into the chart and take a look. Okay, guys, here we are on the 5-minute futures chart for the S&P 500, and I am drilled in today pretty close in the 5-minute chart because I wanted to go over the move down and how it looks. If you're interested in bigger picture views, you can check out any of my videos this week, especially Monday, where I go over a very big picture view as well. So here on the 5-minute chart, this does look corrective, and the reason it looks corrective is the initial move off the top here. It's a pretty clear 3-wave move. You got a 1, 2, 3 that hits the 1, 2, 3, 6. Pretty common stuff for a corrective move. Then you get a bounce in B, and then it looks like we're in C down. Now, it does not look like we have any kind of 4-5, which is what you'd expect before the wave ends and we get our next bounce. So I would expect potentially they may not be done with 3. Remember, wave 3s can extend. This would be 3 of C coming down. So wave 3s can extend. They can move directly lower before they bounce. But if we are going to get a bounce, I would expect it to be a wave 4 of C, and that wave 4 should target the 43.75 area. The 382 retrace would be the common target here. And so that's the kind of bounce I'd be looking for. You also have on the 5-minute chart, you have a little bit of moving average help here as well. So there is some resistance right here, the 382, and some moving average. So it makes sense for a bounce back into that area before we see either 1 or 2 moves down. Remember, you get a 4-5 of 3. And then you get regular 4-5. So this would be 3 of 3, 4 of 3, 5 of 3, and then you get something like this down toward the 43.30 area. This 44.40 area, the 200 daily simple moving average is coming into that area. It would not surprise me to see them spike down into that and then bounce. Okay, and they can do that directly. Again, they don't have to bounce, but if they get it back over 43.68, we'd look for 43.75 to be the target, and then to resume the down move into that 43.40 area or so, one more bounce, and then down to 43.30. That would be the 236 retrace, and that's a pretty common target for an A wave of A. Then we'd look for a B and a C to complete A, and then a bigger B and C after that, just kind of depending on how the structure plays out, but that's kind of what we're looking for overall. So again, the 236 down here would be, give me 1 second, would be A of A, B of A, and then C of A down, and then a bigger B and C down. Okay, so that's kind of what we'd look for overall in the structure. It does not look impulsive, and that doesn't mean we can't still go down and we can't break the lows. It's just right now it doesn't look impulsive. And also you can get, you know, an A, B, C that goes down off the chart here. I'm not going to stretch the chart. Then come back up, make a high, okay, and then come down in the 5-wave move that breaks the lows. So right now it looks corrective. This is pretty clearly 3 waves off the top into this low, and then a bounce, and then looking like C down. Obviously, they can morph into diagonals. They can do all kinds of different things, but as of right now, it does look like a corrective move, which tells me that eventually, after this down move plays out, we should be looking for higher before we go down and break those lows around 41.20. So overall, still looking corrective off the top, but we have broken through some support. We broke through this support here, which was important, and we broke through this support over here, which was important. And now they are back testing that support area, which now becomes resistance, and we should be looking lower. Over on the NASDAQ, okay, on the NASDAQ, we are on the 1-hour chart because the pullback is a little different on the NASDAQ. We expect it to be corrective in both cases, whether we're going lower or higher, because it is playing out as a diagonal to the downside. So the pullback did come down and break through some support right here. This 15 to 85 area was support. It broke through that, close down here at this next support area, this big one at 15,200, getting close to the 236. We would expect it to continue down to the 236 and give us like an A, B, C, and then a B and a C. And then we have to kind of decide where we're at from there. If they give us a start to an impulsive move higher, then they can come take out this high, and we can look for like a 1, 2, and a breakout in 3, which would take us back to new all-time highs. But if they continue to the downside, again, it should look corrective. We should come down. And if it's going to be a bigger move to the downside, we would break through this 236 and likely the 382 pretty directly. Okay, so we would expect more extension to the downside like this for the ABC, and then like B, and then like C down toward 13,600 like that. So that's kind of what you'd look at for the bigger move, is a more direct break of the 236 and 382 here, back into the 50 to 618 range for the first leg down. If it's going to continue higher, you would expect kind of an A, B, C into the 50 to 618, and then an impulsive move like that. So NASDAQ held 15,450 that we've been talking about. They popped over it by about 3 points and then started to drop immediately. I told you that area was very important and very strong, and they were able to hold that and then push lower, and they are back into this support area. So they need to break through that support area, which opens up the 382 down here at about 14,950. Okay, and then through that, and we can come on down into the 618. So it just depends on the depth of this pullback. The deeper it goes, the more it favors the bears overall. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It will take you right over to my website. Once you're there, check out our membership plans area. We have 2 incredible monthly plans that both come with a 7-day free trial, because I want you to get in there. I want you to make sure you love it, become part of our trading team, and make sure it's for you before you ever spend a penny. You can cancel at any time. We also have our Elliott Wave for Beginners online course. As you can see from the comments, this course is helping real traders make real money and finally understand the market in a way that makes sense. How is it that when Jerome Powell came out in the Fed meeting and was hawkish, that the market rocketed higher? How is it that we knew where the resistance box was for this move down? All of this is key levels and analysis provided by Elliott Wave so that you can understand the market in a way that makes sense. It doesn't make sense for the Fed to be hawkish and the market to rocket higher. It doesn't make sense, okay, for CPI to come out hot and the market to rocket higher, or good news to make the market go down and bad news to make the market go up. Elliott Wave makes sense of the market and makes it in a way that you can easily understand what the key levels are and where the patterns fail, so that you don't have to worry about the news. This course is 25 videos in 3 parts where I teach the introduction, your Elliott Wave theory expectations, your mindset and emotion, the KISS method, and why it works. Your chart setup and tools, which might be the most important part, because these tools combined with Elliott Wave theory confirm what you're seeing and make it easier to understand when the key levels fail and what you're looking at. I go through each one of these and how to use them. And the Elliott Wave for Beginners area, where I go through each Elliott Wave, why it works, why it fails, what it looks like when it works, what it looks like when it fails, what to do when it fails, all those different things, the theory of alternation, the corrective depth theory, the pivot, all of it in easy, bite-sized chunks so that you can understand it and finally understand the market in a way that makes sense. The really cool thing, guys, is if you don't want to pay for this course, I completely understand, but you can get it for free if you become a monthly member. It is included in both rooms. In my first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in accounts and what to expect, as well as the training material you just saw. We trade the SPY and the QQQ, and we swing and day trade, so we do trade quite often in my room. However, if you are looking for futures trading or individual stocks or perhaps advanced training, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as futures trading, individual stocks, and PT's reduced risk binary method that absolutely crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures the trade that's so unique. Something you really have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, averaging 3 to 4% gains per week, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. All right, the key takeaways for today: we are looking for follow through to the downside, but we may get a little bit of a bounce up towards 43.75 first. Then we would look for a move down towards 43.40, 43.30 area overall to complete this move down, and then a bounce. Over on the NASDAQ, they are starting to pull back. We would be looking for them to hit at least the 15,141 area. And if it's going to be the bigger pullback, you'd want to see them blow through that and the 15,490 area down into this 14,700, 14,800 area or lower to give us a bigger A wave. If the A wave does stop short of that and we get a BC like this, and we start an impulsive move, we would be looking at new all-time highs. Guys, it's the weekend. Grab yourself a drink, get away from the computer, have yourself a great weekend, spend some time with your family, and I'll talk to you next week.